Welcome to the ACA conference in downtown Manhattan. I'm Jane King. With me, Ben McCulloch, the General Counsel and Managing Director at XA Investments. And this is an interval fund, or you invest in interval funds, I guess we could say. Explain what an interval fund is.
Yeah, hi, Jane. Interval funds are, well, they're a closed-end fund, right? And so they file on N2 with the SEC, but it's a bit of a misnomer to call an interval fund a closed-end fund. In actuality, they are open for investment. And what does that mean, right? As opposed to the traditional listed closed-end fund, which IPOs with a sort of set amount of assets, lists on a stock exchange, and then shareholders will buy and sell the stock that way. Interval funds are much more like mutual funds in that, when investors want to purchase an interval fund, they will subscribe for shares with the fund directly. And when they want to have liquidity from the fund, they get liquidity through a repurchase process, and I can explain that in a second. But so the interval fund really is more of an open-end vehicle, and I've always described interval funds as sort of a registered private fund, and part of that is because of the asset classes that they attract, the types of investment managers they attract. And also a lot of the investors. The investors tend to be folks that are looking for maybe more sophisticated or higher yielding strategies, more alternative investment strategies. One thing that's unique about the funds, though, is the liquidity process for investors. Most interval funds, well, I would say interval funds have to adopt a fundamental policy to provide liquidity to their shareholders on either a quarterly, semi-annual, or annual basis, 3, 6, or 12 months. And at each of those set intervals, they will offer between 5 and 25% of the net assets of the fund for liquidity, right? So 95 to 96% of the market, of all the funds in the market, will offer a quarterly liquidity at about 5%. So that's become the market standard, sort of the norm, if you will. There's roughly 143 interval funds in the market right now. So it's still, I will say, on a relative basis, fairly nascent market. But the growth has been tremendous. And I think there's been a lot of interest from investors and also from investment managers, fund sponsors in developing these funds.
Why would somebody invest in an interval fund versus, say, just a generic mutual fund?
Yeah. Well, generally for access to the type of assets that are going to fit in those. Okay. As I noted, most of the funds are providing liquidity on a quarterly basis. And so because they know that they have, a window or a period of time each year, and they can limit the amount of liquidity that they provide shareholders, these funds tend to invest in more illiquid assets. If you think about private credit strategies, maybe some private equity or venture capital, although I will say that those two strategies fit much better in sort of a cousin structure, which is a tender offer fund, very similar to interval funds. Private infrastructure assets are some great assets for interval funds. So they tend to invest in things that mutual funds just can't invest in because they're illiquid. The assets are illiquid, and mutual funds have to provide liquidity on a daily basis to their shareholders, and so they're really constrained with what they can invest in.
Can retail investors invest in an interval fund? And if so, how do they do that?
Yeah, I am a lawyer, and I will say that my nature is always to say it depends, but it does depend on the funds. I guess it really depends on how you define retail investors. So interval funds have largely been geared toward the high net worth or ultra high net worth audience. Although I will say, the big shift over the last 2 years has really been for these funds to get to a daily NAV and provide daily liquidity so that they can be purchased, some of them even on just a retail Schwab account, right? Just by punching in the ticker like anyone would put a mutual fund ticker in, for example. And so they are available for a lot of retail investors. A lot of that has to do with the type of assets underlying in the fund. There are some regulatory constraints for funds of private funds, right? Fund of funds. Some of those constraints, just come from the SEC. But broadly, I will say, the vast majority of interval funds are available for, most retail investors at this point. Yeah.
What would be an example of an investment strategy for an interval fund?
Yeah, it runs the gamut. We've seen some there tends to be quite a bit of credit funds, and that was really where the vehicle took off and became most popular. And so there's a large portion of private credit strategies in interval funds. If you think of, typical like, less or illiquid loans, we've seen some CLO strategies in interval funds, and structured credit strategies in there. Now, I will say there's a growing trend for the other assets and asset classes in the funds. Over the last few years or last year or so, there's been a growth in infrastructure assets, private infrastructure assets. That's been really interesting. There's always been demand for private equity in interval funds, and there are some interval private equity funds. Those ones are maybe a little bit higher investment minimums for shareholders and investors, just due to some of the underlying assets and commitments that the funds need to make to private limited partnerships. But the strat, if you want to think about like private access, private markets, that's really where you're going to see most of the interval funds operate.
And that's mainly the trends that you're seeing in the market?
Yeah.
Infrastructure?
Yeah, infrastructure is really interesting. We've seen some real assets. Maybe less real estate, just because there's that large REIT, just the REIT industry already out there. Some direct lending or middle market lending. So it's kind of runs the gamut. But I do think that one trend that's actually very interesting is sort of we'll say it's sort of like a real income strategy. And a lot of these are smaller cash flowing businesses that some of these funds will invest in, and it can be across industries. So I just think the vehicle has been identified for a lot of managers as a way to bring a strategy to the retail market that doesn't fit in mutual funds, ETFs, and hasn't been applied in listed closed-end funds.
It's really interesting. If somebody has got enough in equities, for example, but they want some exposure in some other things, it sounds like an interval fund is a way to go for them. So,
well, yeah, I think, we've all heard about, 60/40 is dead or 60/40 is dying, right? And you've got these, all of these sort of like market forces pushing people toward, where can you get yield, or where can you get better yield or higher yield? How can I get access to private? People get access to private markets and private equity. And I think these vehicles fit a need on that side. And they also fit a need for investment managers that have great strategies that they would like to use to access retail investors. They can't do it with limited partnerships, but interval funds are a great vehicle to bring good private asset strategies to the broader masses.
Yeah. All right. Very interesting, Ben. Thank you so much.
Yeah. Thanks, you, Jane. Appreciate it. Happy to be here.